Bob Reynolds, and he's with Brady Ware in the Dayton region. He joined Brady Ware in 1992 after spending several years with a national accounting firm in Dayton. He's a senior audit and assurance services director and is responsible for a majority of the firm's audit engagements, working with a variety of closely held commercial businesses and several nonprofits. And for over 30 years, Bob has worked closely with business owners and leaders of nonprofit organizations to formulate and implement strategies to effectively safeguard, manage, and utilize resources. He has developed an expertise in consulting on such matters as strategic and succession planning, board development and governance, financial reporting, and internal control systems. He leads Brady Ware's nonprofit services team and is the engagement director and primary advisor to many of the firm's nonprofit claims. And Bob has quite a long history of volunteer service in the Miami Valley region and in Indiana. So we welcome you, Bob. The other speaker is Mark Langford, who is with the Miami Valley Small Business Development Center at the Entrepreneurs Center in Dayton. And he has over 8 years experience in the Small Business Development Center network. Mark was the co-founder and co-owner of Network Computer Graphics, which is Cincinnati's first PC-only computer graphics firm. He has a degree in radio, television, and film from Northern Kentucky University and resides in Coleraine Township with his wife, Chris. Also on the line with us today is Kim Woodbury, who is the director of the Miami Valley Small Business Development Center at the Entrepreneurs Center in downtown Dayton. She worked with small business development at Wright State until she moved to the Entrepreneurs Center in 2017. And her background includes being part of a family-owned fabrication and design business, being part of an HR team of a large retail store, establishing and running a K-8 school library, preparing high school students for college placement tests, and serving in the U.S. Air Force as a graphics specialist. Also on the line is Chris Hall, who is with Home Inc., and he is offering credit counseling for folks through Home Inc., and he may be able to address some questions as well. So what I'm going to do now is turn this over to Bob Reynolds, and I'm going to share my screen because Bob has a presentation that he will want you all to take a look at.
Well, good afternoon, everybody. Here we go. As Lisa said, my name is Bob Reynolds, and I work for Brady Ware. We're a regional accounting firm. And what I offered to help with is to have a brief overview of how a nonprofit organization or a small family-owned business can begin to focus as we transition back to work and the new normal, whatever that new normal is going to be. How do we take a look at our cash flow? How do we do some cash planning? We know that's first and foremost on the mind of a lot of business owners right now. And frankly, we've all heard the term, and I will share it right at the beginning, that right now, in the wake of everything that's going on, cash is king. So, Lisa, if you wouldn't mind hitting the next slide, please. Okay. Right now, more perhaps than ever before, it's vital for business owners to understand how their business or how a nonprofit organization utilizes cash. And in order to do that, we really need to understand, where does our cash come from and where does our cash go? Next slide, please. So before we get into the mechanics, I just wanted to kind of share a few high-level comments. Cash flow, whether you're a business owner, a nonprofit leader, or just simply a consumer with a checking account, the general premise here is pretty easy. It's what is the movement of money in and out of our business, our organization? What's the sources and use of money, for personal use? How do we support our families? The important thing for a business owner or a nonprofit organization leader is really cash flow. It's going to determine your organization's solvency. The goal here, obviously, is we want more cash coming in than going out. I also understand that the foundation's received a number of inquiries concerning how much money to borrow, when is it appropriate to borrow, and we'll touch on that in the slides that are coming up. Effective cash management is not a new concept. Just to give you a little background, the last numbers I saw is if you look at overall, not to get us on a downer note here, but overall, the poor management of cash flow really is the #1 cause for business and organization failures. We're just not keeping an effective eye on the cookie jar, so to speak. Monitoring cash is critical right now for any business or organization. So what I hope to provide for you today really is a fairly straightforward, not too difficult process to begin or to implement, talking about, more importantly, how do we identify our sources and uses of cash. I've provided Lisa with a tool. It's an Excel-based worksheet that I've told her that she can make available to anyone who could use it. And it's a nice tool in order to be able to lay out, visually, so that we can use it as a means of overseeing operations that can help you predict, the patterns of how that cash is going to come in, and more importantly, help you plan when is the appropriate time for the cash outflow to pay your expenditures. So if we can move to the next slide. First thing we're going to have to do if you want to do a cash flow analysis is you got to really examine what are the components of your core business operation that generate or consume cash. I know this sounds oversimplistic, but it requires you to look at things like what do we anticipate our cash sales for the month or the week to be? If you sell to customers on credit, or if you're a nonprofit and you've entered into a capital campaign or something, for example, and there are going to be payments against existing pledges or payments from stakeholders for the services your organization buys, we need to understand all of the variables that end up generating cash in our day-to-day operations. We also need to look at, as I mentioned before, what is the timing as far as borrowings on, if you will, on a line of credit, or when to take out a bank loan. And you'll see in a minute when we talk about cash outflows, it's also going to be very important to have a predictable pattern of how those obligations are going to be repaid. Next slide, please. And as I alluded to, cash outflows, purchases. When do we anticipate not initiating necessarily a purchase for supplies or materials, but more importantly, if you're buying on account, when do you anticipate actually having to write the check to pay those bills? Other things a business owner should be considering is capital equipment. I had a call recently with a gentleman who owns a lawn care company. And part of his annual anticipated expenditures are to replace riding lawn mowers, leaf blowers, these types of things. And that equipment purchase is really going to be very important to his ability to provide the service that's going to generate his cash. So a lot of times I've seen business owners or organization leaders look at the typical things like wages, benefits, operating supplies, rent on your building or rent on equipment. But often one common overlooked thing when it comes to looking at the timing or anticipated cash outflows is we tend sometimes to overlook what are we going to be in a position where we have to buy equipment, hard capital with depreciable assets. Another thing that unfortunately sometimes gets overlooked, and I've encountered this in my career a lot of times working with a small proprietor that's running a Schedule C business. That business, more likely than not, is often your single greatest asset. It provides the cash flow to pay your personal bills, to buy your groceries, pay tuition for your kids, assuming that they actually are in school and you have that obligation to pay. So it's also important when we look at cash outflow, not only those direct business expenses, but what are we expecting the business to generate to provide for us to maintain a standard of living? So all of these things, these variables, you're going to have to spend some time looking at, and I would suggest looking at past history. If your business has been open for the last 2 months when most of us have been sheltered in place, I think you need to look at how the money has come in the last 60 days. What are the expenses that you've paid the last 60 days? And I imagine a number of those are going to be to buy materials and supplies. If you're manufacturing or selling something or providing a service, you have to have a handle on those. Once we have these components and you actually perform the analysis, the biggest thing you get out of doing this exercise is the ability to, with some degree of predictability, to look forward and determine, is there a given month where my expenditures are going to exceed my cash? How can we delay or schedule the timing of certain payments? When is it appropriate to borrow from the bank? For some owners, I'm a business owner. Are we going to have a point in time between now and the end of the year where it's going to be necessary for owners to put more capital into the business? And if that's necessary, where's that money coming from? So understanding those variables is really the key to all of this. The actual mechanics of doing the cash flow projection itself, that we'll see here in a second, are pretty straightforward. Lisa, if I could have the next slide. Couple of words of caution. When you're determining, and as I said at the beginning of the sentence here on the slide, let's keep it simple. I'll tell you now, I went out and preparing for this, I said, I'll go out and Google just to make sure that what I'm sharing is relevant. And if you go out and Google cash flow analysis, like anything else, you're going to get a bazillion different hits. And if you do some reading, there are an awful lot of complex, approaches and modeling that you can use for this. I live my life by the KISS method. I'm going to assume most of us on the call have a checking account, and I would liken it to that. I know what you have to know what your monthly bills are. You have to know when that direct deposit's going to your checking account. So we're really just doing this for our business or our organization. Most important, be realistic. And the example that I would give here, and I'm asked often, by clients of ours, would you attend a finance or a board committee meeting? And we're going to review our budget. Not picking on nonprofit organizations, but if I had $1, as the old saying goes, for every time I've looked at a budget and they said, okay, contributions. This year we're going to raise $250,000 in contributions. That's what we're budgeting. And then I'm the voice of reason that says, well, as your accountant, I think the most you've ever raised in contributions is 50,000. So where's the other 200 going to come from? So that's my one of the big things we have to do here is be realistic. You know, and if there's ever a time to be conservative versus pie in the sky, it's certainly right now under the circumstances, you know, that we're all facing with this pandemic. Another thing when you're looking at cash flow, keep in mind, particularly now, that not only are you wrestling with how do I predict and manage my cash flow. I know we've seen this at our firm. I know probably a number of you on the call here have seen this as well. Your customers, your donors, your stakeholders, a lot of them are experiencing financial constraints right now. So try to have an eye towards, and that's why I say in particular, looking at the last couple of months, if you've still been conducting ongoing operations and you haven't shut down, how frequently are your bills getting paid? You know, we all know, we have customers and clients that always pay, you know, we send them an invoice, we get the payment within 10 days. Well, now thanks to COVID-19, maybe the payment comes 40 days later after the invoice date. You need to be thinking about those patterns. Next slide, please. Here are some things you might want to do to help keep that predictability. If you see that customers are paying slower, we want to find reasons to incentivize them to pay more quickly. If you've never done this before, you might want to consider, if I offer a customer, I think most of us are probably familiar with the 210 net 30 type of credit terms. If you've not done that with your customers before and you are paying on account and you're selling on account versus cash sales, I would strongly encourage you to consider rather, can we afford, and we have to account for that in our cash flow analysis as far as cash inflows, would it behoove us to say, look, if you pay your bills within 30 days of the invoice date, I'm willing to give you a 2% discount. What I'll pretty much offer is this: if you can get your customers to give you the cash, even if you're giving that 2%, think of it this way. If they're going to pay me in 60 days and I'm going to have to borrow money during that 60 days to keep the doors open, well, that 2% or somewhere probably north of that is going to be the interest charge for me to borrow the money. So I would certainly rather try to you know, work with my customers, you know, in order to sort of cover that cost, if you will, you know, out of your ongoing operations, you know, rather than leaving things as they are. We have to borrow money in the interim, and we may find that we have to pay a percentage point or two higher on those borrowed funds. The next slide, please. Nonprofit organizations. Since I know we have a mixed group here, a couple of things when it comes to cash inflow that I want to leave you with. If you have that loyal group of donors that give to your annual campaign every year, they're passionate about your mission, they have a history of giving, now is the time to be out asking them to help us manage operations and provide funding for our programs. Would you consider giving that gift that you normally would do at the end of the year? Can you give us the money now? And I will tell you, because I lead our nonprofit practice, I probably receive, not only on a personal level, but on behalf of the firm, I'm receiving, arguably, I don't want to exaggerate, probably 3 or 4 of those specific requests almost every day. So keep that in mind. The second bullet point here, I know everyone is sheltered in place. A lot of us are not in the office. Maybe your organization has historically relied on, you know, a nice letter on a pretty piece of stationery, and we do our annual appeal. Well, whether we like it or not, and I'm 62, and I never thought I would be as tech savvy as I seem to be today. Get out on the web, and now's the time to step up your fundraising efforts. I have a history of kind of being plain spoken and blunt as a spoon. I'm going to tell you how it is. All of the organizations right now that have a mission tied to COVID-19 or providing service to people dealing with the pandemic, they are out there full force. Sadly, the best way I can describe it is, whether or not you may believe it, there's going to be a finite pool of money that's going to be available for the nonprofit community. Now's not the time to stop asking. You're going to have to figure out, what can I do through the net? You know, could I put it, you know, can I get to a point where I can make it available for somebody to give money with their cell phone? You know, if you don't have an app, you might want to be looking at that type of thing. And right now I'm working on a communication piece that I hope to publish next week. And it's entitled, Don't Forget the Virtual Volunteer. At the end of the day, individuals like me, I'm 62 years old, I'm a 3-time cancer survivor. We're opening up the office in a limited capacity next Monday. You know, we're following, you know, Indiana, Georgia, Ohio guidelines. That's where our offices are located. I'm not going back to work. Every one of those states say people like me, as does the CDC, you all need to stay home. So for nonprofits, think about the makeup of your boardroom. What I see with about 80 organizations that I'm responsible for, the lion's share of the tried and true volunteers, good, bad, right, or wrong, are individuals that look and sort of look and act like me. They're over 50, you know, a lot of them are over 60. They possess an incredible amount of institutional knowledge. They're the ones that you can always rely on to show up for an event, to help with setup or clean up afterwards. They're the ones, quite frankly, that have connections to money. You know, and one of the biggest things I hear from nonprofit leaders when it comes to their board, we're craving for diversity. And how do we engage millennials and young people? Well, if your organization is transitioning back to work, you need to be prepared. People like me aren't going to be at the event, even if you're able to hold one. We're not going to be in person at board meetings. So a couple of words of advice here. You got to capture whatever institutional knowledge they have. And if they've helped you raise dollars in the past, then you got to work with it and make it easy for them to help raise dollars in this virtual world that we're in today. So keep up your fundraising efforts. Now is not the time to slow down. Next slide, please. Okay, cash outflows. This one I think is often a little easier than trying to predict the cash inflows or your revenue streams. This is really sitting down purposefully, almost like you would do at home with your household budget. And we have to lay out month by month, you know, what do we have to pay for? Utilities, salaries and wages, supplies. We covered all of these things before. So, and when I say we have to figure this out, I'm saying actually we got to get out an 8.5 by 11 tablet of paper, and we need to start writing things down, you know, because this is going to be the data you're going to use for the tool that we're going to share with you today. A couple of words here about bill paying. And really these are tried and true cash flow measures. I like to share stories. I had a client of mine once where we were talking about their business and their bookkeeper, you know, came into the owner's office and said, "Hey, I've got checks for you to sign." And as he was signing the checks and talking to me, his comment was, this is the worst part of my day. I hate having to sign checks. My question was, are you paying your bills daily? Why on earth are you paying your bills daily? We run a 4-office, 180 member firm. We pay our payables on the 15th and 30th. So if your invoice comes in on the 2nd, we're not touching your invoice to pay it for another 13 days. So don't lose sight of the fact that you control the timing of these outflows. And what I've seen a lot with small businesses, is often we'll go to the mailbox and get the invoices, and tomorrow morning the bookkeeper, or the family member responsible for the financial end writes the checks. You don't have to pay that early. Maybe now you want to say, hey, I've got critical vendors that I want to pay quicker than others because there's an incentive to pay them quickly. We talked about you offering discounts. Maybe your suppliers are offering discounts. If you have the cash flow to pay those bills and take advantage of the discount, pay those to get the discount. If you're paying utilities and rent, those are going to have stipulated due dates. So pay it in time to hit the due date. There's no incentive to pay it early. You're not going to get a break on the amount. And for a lot of vendors and a lot of businesses, and this is why I say you need to be thinking about what your customers are doing. They're managing their cash flow the same way. And they're saying, well, we used to, in the past, we always try to pay it 30 days, but now because of COVID and my cash flow, I'm going to pay within 45 days. I can't tell you what the right number is, but I can tell you that with some degree of certainty based upon what I see with businesses, very few of the organizations and commercial businesses I work with, their average collection or their average collection period on their receivables is less than 30 days. So that means their customers are paying them between 30, and sometimes as far as 60 days. So as you start to think about the timing of paying bills, keep these things in mind. You're in control. You don't want to jeopardize a relationship with an important vendor or supplier. If you're concerned about that, pick up the phone. Work with them because you're in control. That's the main message here on outflows of cash. To the extent possible, if you control the timing of it, take that into consideration as you build your cash flow analysis. Next slide, please. This is my final slide. I apologize that it's small print, but the good news for everybody on the call, this tool that I have created lays out cash flow for a 12-month period. I think I'm an okay Excel user, but I do want to put a disclaimer up front. As you start to input your data, if it looks like the math's not working, please check the math. This is not a canned application, that's been through Q&A or quality control review that we're marketing to the world. I just wanted to make it available for everyone on the call. And if we walk down this, it's almost like keeping a rolling checkbook, but keeping the data all organized in one place. The place we obviously begin is your beginning cash balance. Now, I will tell you now, a lot of organizations maintain more than one cash account. If you want to do this by account, you're certainly welcome to. My example here says I'm a small business owner. I'm starting on January 1 with $10,000 even combined in my bank. It could be my bank and my savings account combined. What I've done here is I've said, okay, what are my sources of cash? Well, I think this month I've looked at maybe the backlog of my sales orders, or I've looked at prior periods, and I expect to collect $5,000 from customers. I do sell on credit to certain customers, and I expect based on collection patterns, for those customers, based on the receivables I had at the end of December, I think I'll collect $2,000 in cash on my receivables. So for the month of January, I'm going to have $7,000 coming in the door. Then I have to factor in, and I mentioned earlier, talking to someone who owned a lawn care company. So I thought of that as examples of cash purchases. I've got folks out on the truck that are going around to residential and commercial properties. They're going to have to buy gasoline for mowers. They may have to stop at the hardware store, buy, a new mower blade or trash bags, whatever the case may be. But I know that when they're in the field, they have, let's say, funds that I provide for them every day to make these purchases. So that cash is in their pocket. More likely than not, it's going to get consumed. So I'm baking that into my analysis. Then I kind of organize things and, okay, what are my payments to third parties? And what I do here, what I suggest here is you consider the cash gone when you write the check. I've had people before say, well, I'm going to try to predict when the check is going to clear. I'm just going to tell you now, you're going to drive yourself insane trying to keep track of that. So if I write a check, as far as I'm concerned, even though it may be 4 days before the cash is gone, it's no longer my cash. It's as simple as that. So I'm going in here saying, and I did this on purpose, I will bake into my cash flow analysis, what are the wages for my employees? I don't include the wages for myself. If I employ my spouse, and the reason I don't is because in hard times, I can adjust my numbers. I can't adjust what I'm paying my hourly employees unless I decrease hours. And then we all know in good times, I may take a little more this month. I want to go on vacation. I want to buy a new car, whatever the motivations are. So I say stick with your employees. Tax payments and withholdings, don't forget that. You do have to match employer FICA. That's a cash outflow. And again, these outflows could be in the form of checks. It could be direct deposits, or in the case if you're using a payroll service, you're probably most likely paying your tax obligations through an ACH transfer. That's all cash going out the door. The rest of it's pretty self-explanatory, and again, another word of caution, because I see this a lot of time with small businesses. If I look at your income statement, you got 75 lines of differently identified expenses. You may want to group, for this purpose here. So, I've got rent on my building, I've got utilities, I have other charges, repairs and maintenance. Maybe we group those simply as facility costs. You can group all your payroll related costs as just personnel. I just want to make sure that we do pick up all those individual components. The next group, and I know this has been asked, payments on debt obligations. These are things where we pay for a capital lease, we're paying back a bank note. These are not things that typically run through our income statement. These are cash flows associated with obligations on our balance sheet. You want to factor those in. I don't see a reason for this analysis to separate principal from interest payments. You just want to know how much cash do I got going out the door to pay that loan. Then I come down to return to owners and stockholders. This is the bucket where if you have the ability, you also have a certain degree of control. And I've given you examples here. And these would be, in my opinion, these are things like your salary, your monthly draw. If you're paying family members to help create a source of income from them. A lot of small business owners employ their kids, in a part-time capacity to give them some spending money and teach them financial responsibility. This all goes down here. The other one is proprietor stockholder withdrawals and distributions. If you're a proprietor, again, This is where we would put those monthly cash outflows, because I know I have to generate enough cash in the business to pay my personal bills. So that becomes a cash flow outflow that you're relying on the business to provide. And the way the spreadsheet works is it runs the math down. We end up at the end of January, it was 6,900. What I tried to show here is then that becomes our beginning cash for February. We go through the same exercise. And then what I did, if we could scroll back up, I want to show you just to highlight this, because we're talking about bank loans. I think most of us would agree, if this was reflective of our business, in January and February, I didn't need to borrow any money. But as you can see, because of expenditures in the month of February, now all of a sudden, I'm predicting in March, I'm going to start the month with $2,000. And $2,000 isn't going to cover March's bills. So what then, based on this analysis, then is when I think you step back and say, okay, in February, and I would agree, we may have bankers on the line here, you're going to have to think about this 30 days or maybe 45 days before you need it. That's the time when I need to talk to my financial advisor or my financial institution about what borrowing opportunities are available. Then what I would do is I would, in my analysis, I would show those loan proceeds coming in. I would add the debt service to my cash outflows, and I would continue down on the path. And what I found for small business owners is that $25,000 that I said, or whatever that I'm going to borrow, maybe I have a $100,000 line of credit. Maybe this represents, I'm going to probably have to draw some money. I'm going to put it in my model, 25,000 in March. I'm going to pay interest and principal if it's required. I would encourage you then, particularly on a line, operate to pay your bills. And then if I need to take another draw on the line in June, take the draw then. And one thing that I keep hearing, a lot right now because of COVID is, I have $200,000 available on my line of credit. Should I go and borrow all of it right now? I'm not ready to say borrow it all right now, because I think the banking system is going to collapse. Certainly, if you do this analysis and would have the availability at any point in time, if you had to pay all that money back, no harm, no foul. I've spent 30 years and said, you know what? I may not be the sharpest pencil in the box, but I think I observe what happens with people, okay? If I have a $50,000 line of credit and I bring that $50,000 in now, and I know the business is generating cash for me to pay my bills, I'm going to look to those excess borrowings. If something comes up, it's going to be real easy for me to take a greater draw for personal reasons. And now all of a sudden, I hit a hard time. The bank wants their money back. I don't have the money. That's kind of my advice. I know other people are out there saying the exact opposite. If you can get a hold of money, regardless where you're borrowed it from, take it all now. My biggest concern is we're all humans, and under pressure, think about your own personal spending habits. To me, I'm a gadget guy. So if I'm sitting on excess money and they come out with the latest, greatest cell phone, my first inclination is I got to figure out how to buy that latest, greatest cell phone. But if I'm not sitting on all that money in my checking account, I might stop and think a little differently. So that kind of wraps up my portion here. I hope this gives you a little bit of guidance on how to get started. On the first slide, and Lisa can certainly just disseminate this to all of you, is my email address. The phone number listed is my cell phone because I don't use shelter in place anymore. I say that now people are going back to work. I'm handcuffed in place. That's just my personal way of looking at it. But if you have questions, you just want to, sort of like a gut check on, am I looking at this correctly? Anyone and everyone on this call, if you need a few minutes of my time, call. You know, there's no bill. It's free. And sometimes I realize, when you're faced with these decisions, I always say you just want somebody to dream with, or that other person in the room to give you a reality check. Please feel free to reach out. I'll make myself available to help in any way I can.
Great.
Back to you, Lisa.
Thank you, Bob. That was really great presentation. And as Bob said, we'll make the PowerPoint presentation available, as well as the Excel sheet that has the pre-populated formulas in it, so you can plug your numbers in and then see what the cash flow looks like at the end. Now I'd like to ask Mark Langford to
Okay, everybody hear me okay? Give me a thumbs up if you can hear me okay. All right. I have 4 quick questions I wanted to cover here. I know our time's getting kind of short. We wanted to leave some time for a question and answer. One of the topics I wanted to cover was what should you consider when you're thinking about opening or closing your business? What this whole situation did was put businesses in a situation where they will be startup businesses coming out of this. So you have to look at your cash position, and that all goes back to what Robert was talking about on your cash flow. Do you have the cash reserves to actually reopen your business? Other things you will need to consider are legal considerations, regulations as far as, will your employees be protected and healthy if you come back? Have you met all legal ramifications as far as protecting them goes? Maybe you had rent payments deferred. Are you going to be able to pay up that rent when you reopen? Also, if you've got a PPP loan, there are certain things that you're going to have to do to document that the money was spent on retaining your employees. So do you have that documentation in place to prove to your bank that issued you the PPP loan that the funds were used appropriately, that 75% was used for payroll and 25% for accepted use? So there's a lot to consider when you're thinking about whether or not to open or not. Obviously the food service, hospitality industries are hit the hardest by this. So they're the ones that are going to face the tough decisions. Good rule of thumb is, if you were struggling before this crisis, you're going to have a real challenge to reopen coming out of it. So, a lot of things to consider, legal ramifications. I do have a reference website that was provided to me by somebody with Legal Shield, a client of mine, that I can send to people to look at the different things, because a lot of this is, I don't want to forget anything. If I come back, I restart my business, I want to make sure that I've thought about every step, that every legal ramification of reopening my business. So I do have that as a resource, and I can send a link to anybody that needs that. I'll put my email in the chat box after I'm done here, if you're interested in that. The second question was, how do I find out about grants for small businesses? Normally, I tell people there's not a lot of grants out there, but there are some companies that are issuing grants, and other organizations issuing grants for struggling businesses because of the virus. Oddly enough, one of the top places to find out about these is just stay engaged on social media. I think places like Facebook and things like that. Any groups that you're a member of are good ways to find out about these. And don't forget your local resources. A lot of people think, well, I'll go for a national grant somewhere, but a lot of grants you don't hear about, you can find out about by contacting your local economic development department, Chamber of Commerce, Community Foundation. Sometimes these organizations know about grants that aren't highly publicized, or it's harder for you to hear about them. So, make sure that you're checking with your local resources. Start with your chambers, your community foundations, and economic development departments. That's a good place to check. And then also, if you keep up to date with our, keep checking in on our website, which is SBDC Tech, SBDCTEC.com. We keep people updated on what all is going on from a national standpoint. Anything that we hear about, we'll certainly relay that onto other people. So the third question was, how can I get help filling out forms and researching other sources, et cetera? I represent an organization that helps you do that. The SBDC Small Business Development Center is here to help clients. We do ask that you register as a client, but once you do, there's no charge or no commitment to do so. I've helped people with both EIDL and the PPP programs, as well as standard financing during the crisis. Some of the forms can be confusing, and just getting documents together to fill out, knowing what you need, it can be a challenge sometimes. So because we're working with a variety and a large number of clients, we can help with that. So you can register to become a client at that same website, at sbdctech.tec.com. And we'd be glad to help you. If it's specific, say it's a PPP loan, usually the banks that you got PPP loan for or applying with will help you with the form. They get reimbursed for doing that. We do not get paid for doing that. So they should be willing to help you out with that. Also, if you're filing a claim such as business interruption insurance claim, your insurance agent's a good place to start with to get assistance on that. My favorite question here, the last one, was, are there encouraging models from other regions that we can look at? And there certainly are. I think one locality I think that's been a kind of a trailblazer on this has been Miamisburg. They started a thing called the Star City Fund, which was originated, I think, through the MMA, the Miamisburg Merchants Association. And what that was an interest-free loan program for local businesses within a certain geographical designation. And I've had several clients get that. It was fairly easy application process. And basically you were free to use the money, unlike federal restrictions. You were free to use the money for whatever you needed. The payments don't start until September, I believe, and it's 0% interest. So it's a good way, we're talking about cash flow, a good way to manage cash flow while sales are kind of low. They are also using, they've looked into a program called YIFTEE, YIFTEE. And basically that is a community gift card program where businesses opt in. And if you opt in as a participating business, people who buy these gift cards can use the gift cards at any of the businesses that have opted in within the community. So it's a good way to generate business within the community. And it's a pretty cool program. I like it, and we'll see. I haven't seen too many results right away, but it looks like it's kind of promising. I've also seen a couple things done outside of the area. Again, with the gift cards, I've seen a Chamber of Commerce have a gift card program where they would pre-buy gift cards from different businesses. Say, I'll buy $2,000 worth of gift cards from your restaurant. I'll sell them, but here's the $2,000 right now. All you have to do is honor them later. So again, that's a great thing, a great program from a cash flow standpoint. And again, that was originated by a Chamber of Commerce. And another thing that I've seen, and I've seen this before the crisis, is what they call a kind of like a consumer flash mob program, where you pick a business in a community and then everybody concentrates their efforts on placing an order with that particular business on that particular day. I guess in this case, it would have to be somewhat, at least partially, a virtual flash mob at this point, since we're all kind of locked down in our homes. But I think that's a interesting and good program to, you just rotate and go hit all the businesses and make sure, at least for one day, they're getting swamped. Of course, you want to let them know what day that's going to be so they're prepared for it. But, it's going to be a challenge coming out of this. So I would encourage people to work with their accounting firms, with the SBDC. Take advantage of all the free resources you can, and see if we can make wise decisions and come out of this. And I think Robert made a good point. You got to watch your cash. This is a time when you don't want to make rash decisions. You don't want to spend money that you don't have to, and you don't want to spend money too quick if you don't have to. So managing, I was going to talk a little bit about cash flow, but I can't improve on what Robert said. And I can't emphasize that enough. Wise and discretionary use of spending is going to be key to business survival coming out of this. So those were the main things I wanted to touch on. So I'll open it up, I guess, back to you for questions.
All right. Thank you so much, Mark. And again, thank you, Bob. We have some time if folks have questions. Wow. You got all your questions answered? Just be sure
I guess
to.
I have a question.
Yeah.
So today I received notification that we were not accepted for our PPP. I don't know if this is answerable here, but we did receive an EIDL loan. And I wondered if, my understanding was that I would have to bundle the PPP and the EIDL. I wondered if anyone could give me some guidance on, now that I don't have the PPP, to bundle it. Is there restrictions, or is there a use of the EIDL that I can have to make it a grant instead of a loan? And is this the person, is there someone who can answer that question for me?
So this is Molly.
Yes.
This is Kim. The idle money that you got, was that the advance? Was it?
I believe so, yes.
Okay. That is considered a grant, and there are very few restrictions on that as of today.
Okay.
I will say things change sometimes, and but generally when they put a new rule in, they'll say this is from here on out. So I think you're probably pretty safe with that.
Okay, great.
So,
thank you.
And Molly, I would check with your lender who you applied through the PPP with, because if it was a documentation issue, they're still accepting applications, so you might be able to get back in queue.
Thank you. I applied with Chase, and they have submitted too many applications, so we are.
So US Bank is still accepting applications, and I can send you a link if you want to.
That would be great. Thank you.
Yeah. Just shoot me your email and I'll get it over to you.
Okay. I'm sorry. I don't have you on my screen. Who is it? Okay.
No worries. This is Ashley.
Okay.
Ashley,
Ashley,
I'm the branch manager at US Bank.
Okay, great. I will send you my email. Thank you.
You're welcome.
Okay, other questions? If you have a question, just be sure to unmute yourself.
I just wanted to exclaim, US Bank is still accepting applications. That's great.
Yes. It is definitely a process, and we are still accepting them. And I know that some people who applied earlier this week have gotten through. So it's moving quickly if you apply.
I had put some questions in the text box, but you answered the one. I mean, when they deposit this money in your account, it just says EIDL. It doesn't say if it's an advance or so does that, if we've received a deposit in our bank, does that mean that we're still being considered for additional funds, or is that it?
I don't think we know. I would.
Well, that makes it hard to know for sure. Is that a loan, or
So did you?
That a grant?
Say that again. Repeat your question.
Did you apply for the PPP and the EIDL or just the EIDL?
I applied for both.
So the PPP is totally different. That's through your bank.
Right.
The EIDL is through the, and there were some people that got the advance and a loan through the EIDL. I would think that they're just working on the advances now. If you're going to get a loan through the EIDL, they're going to contact you for additional paperwork.
Okay, well, I just didn't know, you know, they don't send anything, the money just appears in your account. And so I didn't know whether to count on that money being a, you know, a grant or whether it was something I was eventually going to have to. And just as I'm trying to sort of, you know, project my finances, it's like, okay, could there potentially be more coming, or is that it? Or the fact that I didn't have to sign anything, I guess, is an indication that it's an advance and a grant. And if we get to the loan phase, I'll have to sign things. Is that a pretty safe assumption?
If I can jump in, I think I agree with what Kim said, and I agree with what you're saying. General rule of thumb is an advance is going to be $10,000 or less. If you've got a loan in addition to that, as Kim said, there's going to be some paperwork that you're going to have to sign for the loan. So in mysterious money that appears out of nowhere from EIDL is, I think, especially if you're going to be at or under the $10,000 mark, I think it's going to be safe for you to assume that that is the forgivable advance.
Okay. And if worst came to worst, and you get the PPP and the EIDL and you wind up having to declare bankruptcy, can those be rolled into the bankruptcy, or are they something that's considered separate?
That's a real good question. I'm not really sure about that. I would imagine, you know, especially a PPP money that's not forgivable for whatever reason, is, you know, you didn't keep your people on the payroll or whatever. That's a liability, and I'm assuming, like any other liability, it's going to be considered in the bankruptcy.
Okay.
So also, let me make sure people understand that if you get the EIDL advance and you get the PPP, the advance is considered part of the forgivable amount for the PPP. So you're not getting.
No. The advance is only not considered part of the forgivable amount of the PPP if the reason you selected when you took out the EIDL loan is for payroll.
Payroll.
Yeah.
Okay.
Okay, because thank you, because that's been very confusing. We had a meeting with an accountant yesterday who said that they were going to be rolled together and under the same guidelines as the PPP, and that was the first I had heard of that. And then
If you selected payroll when you applied for EIDL, then yes, they will affect each other. If you did not select payroll for the EIDL, then you should be okay.
Okay, great. And then there's also been some question now that they've opened extended enrollment for self-employed and 1099s. If you accepted the PPP, are you then not eligible for unemployment? And if you decide you would do better with unemployment, will the PPP, and then you don't use PPP for owner compensation, will it just convert to a loan, or will there be some sort of penalty for not using it the way that you said you would? And the other thing is about the PPP, if I don't wind up using it for payroll and but I do pay all my rent with it, is 25% of that still forgivable, or is it only forgivable if you met the clause of hiring back your employees?
So I don't know the specifics of all of that yet. I was doing some reading on it yesterday because there's, I think, a lot of detail that's going to go into the forgiveness side of it. But from what I read yesterday, it looks like a percentage. So let's say you had 5 employees before COVID-19 happened, and you only hire back 3 of them. So you're at 60% of your payroll. Well, the forgivable amount of the loan is going to be 60%, is how I understood what I read yesterday, but I think they're still getting out some of the guidelines for how that's going to get calculated. So
if you did 60% for payroll and the other 25%.
No, the 60%, they're basing it on the level of payroll from what I understand.
Okay.
So if you hired 3 out of 5 people back, that's 60% of what you were at pre-COVID-19. So they're going to multiply that loan amount that you took out by 60%, and that's going to be your forgivable amount. So the rest of it would turn into a loan at 1%. Or you could pay it
Okay.
back if you didn't use it.
Okay.
And I
That's
just
what I
wanted,
understood too.
I just wanted to say, Jenny shared on chat a PPP fact sheet that might be helpful for y'all to take a look at. Jean Marie, you had a question, comment?
Not a question, but a comment that the revolving loan fund that the foundation put was through the credit union, where the application process on the first round closed yesterday. I do anticipate it to open back up on Saturday and would be open again through the following Wednesday. So with review on Thursday and funds the following Friday. So I just anticipate, just based on the information I've received from Sandy at the credit union, we do expect that to open back up on Saturday, but we will send out a note to all those on copy as well.
And can you remind us of the terms?
Yes, for both business and nonprofit, the revolving loan fund that is interest-free and until December 2021. First payment is due on May 1st, 2021. And interest will be, and final payment of the revolving line of credit is December of 2022. And interest in the last year.
Interest at what rate?
It's 2.75, I believe. Don't hold me exactly that,
Yeah.
but somewhere in that very close vicinity if it's not that.
Okay, thanks.
Can I also make a comment? I see in the questions that Jenny said she's not been able to apply for the EIDL because the application has not been available. And they've opened it up only for farms. They opened that up yesterday or the day before because in the initial period, farms were not allowed. So they've opened it up just for agricultural, aquaculture, and farming things now. But they're not for general businesses.
Gina Marie, this is Jalen Rowe. Is the information that you just gave out, is that on the foundation's website?
Yes, it is.
Okay.
It's at the bottom of the screen when you first come in. There's a variety of small buttons, and I believe it's the first button, and it has information about the individual, nonprofit, and for-profit loans. And the individual loans are specific, are loans at $1,500 per household, whereas the nonprofit and the business are actually line of credit for the first 18 months, and then they turn into a straight loan. So.
Yeah, and Sam just also noted you can also call the credit union to find out more information.
Yes, and to apply, you need to call the credit union. The foundation is not involved in the application process at all, but the information about those is on the website.
Good. A couple of other local resources, and we'll get this posted more widely. The Yellow Springs Development Corporation has taken $30,000 of the revolving loan fund that we received, and it is being set up as forgivable loans at the credit union. And there was just an article in the paper today about that, so we'll get that further socialized as quickly as we can. There's just a couple criteria, and I don't have those right in front of me, but we'll have those out there. And like I said, it's in the paper today. We'll post those on a couple different websites and on Facebook as well. So that's another source. And then Karen Wintrow, you noted something to me a little earlier about another option. If you want to unmute yourself, Karen.
Ask Ashley. It was about the Elevon.
Yeah, from the cash flow stuff.
Yeah.
Yeah, so Elevon, who is a credit card processor, they've done a lot of stuff to make it easier for businesses if they want to bring their stores online or set up retail e-commerce. They set up a really cool platform, and they've made it really affordable and reduced a lot of the costs on it. And then also for restaurants, if they were looking to do like order online, they've set up a pretty easy to use system to do that. And I know a few businesses in town have already taken advantage of it. But they've reduced costs to pretty low. Like I think most of them have no monthly fees. Some of them might, depending on what you do, at least through September. And depending on how things go, that may be extended because they want to make sure they're supporting small businesses.
So how do we find out about that?
So John Webb, he's our local guy. He's got all that information. Karen and I were talking about having a call set up maybe next week to have him present on what some of those options might look like. So maybe more information to come on that.
Okay, great. Melissa?
Yeah, I was just on the Ohio Restaurant Association finance call, and they announced that pretty soon that they're going to have a Main Street loan program for restaurants and small businesses available. It's another kind of low interest loan program that's coming in the mix.
Great. Anyone else with questions? All right.
The governor's press conference just started, so we'll learn what the fate of restaurants is in the next few
Right.
minutes.
Right. Okay. Well, thank you all for your participation today. Thank you especially to Bob and Mark and Kim for your input, and Ashley as well. And hope this was helpful. I will let you know how you can access all these resources and get those to your friends who weren't able to make the call as well. So thank you very much.